Now let's take down more line items from the CPI report. Airline fares jumped. Ooh, I say so what? Of course, airline tickets are up huge over a year. Nobody was flying in May of 2020. Plus, the airlines did misjudge the strength of the Pfizer and Moderna vaccines. So they haven't grown their capacity to keep up with new demand. But there are more than 90 new airlines launched this year. And there are plenty of planes to be had. Fares will plummet once these companies get rolling. Next, oil and gas. All right, this one's tougher. We all feel it. But this is actually another supply issue. Remember, the Biden administration is a friend of the oil patch, right? I mean, witness the big give up on the Keystone Pipeline today. The Trump administration sowed the seeds of oil and gas price destruction by encouraging companies to drill and build pipelines. Now, though, there will be far fewer pipelines built, and oil companies are far more concerned about environmental issues, so they aren't producing as much. Again, that's got nothing to do with interest rates. The more a president hates oil, well, the higher the price of oil goes. The grain complex, way up, too. However, this is another problem that tends to fix itself if you give it enough time. When grain prices spike, farmers buy more equipment and plant more crops, which in turn sends prices back down. And that is exactly what's happening. Go read the Deere conference call if you disagree with me. What else? I'm not surprised that dining out costs more. Something like 150,000 restaurants closed during this period. The remainder need to charge more in part because they haven't been able to make it up in volume due to COVID restrictions. Now that these restrictions are easing, prices should come down, or at least stop climbing. Sure, Starbucks is talking about a cup shortage, but they have more volume themselves because so many of the independent coffee shop competitors went under. They just misjudged. The supply chain glitches in this industry tend to be related to freight and plastic. Plastic prices have roared because we've got so many petrochemical plants along the Gulf Coast, and they've gotten hammered by Winter Storm Uri. As for freight, well, that one, I got no answer on that one. We don't have enough truck drivers. It's a difficult profession. They need to pay them more. When people fret about inflation, that's what they're really afraid of. They're afraid of wage inflation. That's what they're scared of. But before you start freaking out about Weimar Republic-level hyperinflation, remember what we really saw in last Friday's non-farm payroll report. The labor participation rate, it fell 0.1%. Average hourly earnings were up just 0.5% month to month, and they only increased by 2% year over year. Meanwhile, the average work week actually fell 0.1%. Honestly, I'm surprised these numbers are so low given the pressure from expanded unemployment benefits. Those benefits go away in September. It wasn't that strong an employment number. How about the port congestion that's playing havoc with so many goods? All right, get this. There's a little inside baseball. I think the pressure goes away when commercial flights restart from Asia to the United States. They're going to make a comeback. Do you know that lots of cargo normally travels on those passenger planes, not just in the containers and ship? Once they start flying again, that logjam is going to diminish. Put it all together, and it's no wonder the Federal Reserve is keeping rates low. They don't have to lift a finger. Most of these problems are going to sort themselves out.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.